Ever been staring down the fridge, realizing it's more populated by science experiments than actual food? Or maybe that unexpected bill showed up, throwing your perfectly planned budget into disarray. We've all been there, that moment when a little extra cash would solve a big problem. That's where financial apps like B9 come in, promising a quick and easy solution. But with so many options out there, it's easy to get confused. Can you actually borrow money with B9, or is it something different? Let's dive in and find out. B9, not your typical loan app. First things first, B9 operates a little differently than traditional loan apps. You won't find any options to apply for a specific amount or set up a repayment plan. Instead, B9 focuses on what they call early access to your earned income. Here's the basic idea. Say you worked a shift on Monday, but payday isn't until Friday. B9 can connect to your bank account and analyze your income history. If approved, they'll essentially front you a portion of the money you've already earned. It's like getting paid a little bit early. So, can you really borrow money? This is where things get interesting. Technically, you're not borrowing money in the traditional sense. You're accessing funds you've already technically worked for. However, there are a few key things to consider. Approval isn't guaranteed. B9 analyzes your income history to determine your eligibility and the amount you can access. There's no guarantee you'll be approved, especially if your income is inconsistent. Subscription fees apply. Unlike some loan apps with upfront interest charges, B9 operates on a subscription model. You'll pay a monthly fee to access the early access feature. There are typically different tiers with varying access limits, so the cost can vary. Repayment is automatic. Once you use the early access feature, B9 will automatically deduct the advance amount on your next payday. This can be helpful for budgeting, but be mindful of potential overdrafts if your account balance is tight. B9 versus traditional loans, weighing the pros and cons. Now, let's compare B9 to traditional loan apps to see which might be a better fit for you. B9. Pros. No credit check required. Great for those building credit. Early access to earned income feels less like borrowing. Predictable repayment through automatic deductions. Cons. Subscription fees can add up over time. Limited access amounts compared to loan apps. Not suitable for large, unexpected expenses. Traditional loan apps. Pros. Can access larger amounts of money. Flexible repayment plans available. May offer lower interest rates for qualified borrowers. Cons. Credit check required. Can impact credit score. Interest charges can add up quickly. Risk of falling into a debt cycle if not managed properly. The bottom line, is B9 right for you? B9 can be a handy tool for managing short-term cash flow issues, especially if you need a small amount to bridge the gap between paychecks. It's a good option for those who dislike traditional loan structures or have limited credit history. However, keep in mind the subscription fees and the limited access amounts. If you need a larger sum of money or have a longer-term financial need, exploring traditional loan apps with lower interest rates might be a better option. Remember, always compare rates and fees before committing to any financial product. B9. A budgeting tool, not a magic bullet. Ultimately, B9 shouldn't be seen as a magic solution to all your financial woes. It's a tool that can be helpful in certain situations, but it's crucial to use it responsibly. Here are some tips. Only use B9 for short-term needs. Don't rely on it to cover recurring expenses or large purchases. Track your spending. Be mindful of how much you're accessing and ensure you can comfortably repay it on your next payday. Focus on building a budget. B9 can be a temporary solution, but creating a solid budget is key to long-term financial health. With that said, thanks for watching, and until next time.